Do you get confused with cash flow analysis paralysis, and are you not able to move forward because you don't know how to analyze cash flow statement in your business? Then this video is for you, because in this video I'll share with you how to analyze cash flow statement as an entrepreneur and go from cash flow confusion to cash flow clarity and safeguard yourself from potential cash flow collapse to cash flow creation. So keep watching. Hi, I'm Shishir. I'm financial transformation coach for female entrepreneurs who wants to scale their business fast. If you want to solve cash flow problems and improve your cash flow confidence, control, and certainty, then don't forget to subscribe and hit on the notification bell right now so that you do not miss out on future new videos. In this video, I'm going to share with you how to analyze cash flow statement as an entrepreneur step by step. I've learned this through my experience working as a financial coach with ambitious entrepreneurs like you, running businesses from 40,000 to 40 million pounds in revenue, guiding them to run uber profitable businesses. So let's dive in. You may already know cash flow statement has three sections: cash flow from operations, cash flow from investment activities, and cash flow from financing activities. Then there's direct method with an indirect method, and there are certain rules that which items goes where in this section and which item doesn't end up go anywhere in one of those sections. Oh my god, this is so boring. I hear you. It doesn't have to be this way. You're not training to be a finance professional. You just want to be a financial savvy entrepreneur who wants to analyze cash flow statements so that you can move forward and make smart decisions and grow your business. You don't need to get bogged down in direct and indirect method and three components. So going forward, you can follow these simple, easy steps, and you can do this even if you are number phobic. Step number 1, confirm key balances. Check opening and closing bank balance and total receipts and total payments from the cash flow statement with the bank statement. If they don't agree, then you are analyzing the wrong information in the first place. If you don't have a cash flow statement to prepare and analyze, then use the one I shared in the description below and make it your own. In Mega Profit Limited, you can see opening balance, closing balance, total receipts, and total payments agreed between bank statement and cash flow statement. So we have a good starting point. Tick. So let's move on to step number 2. Step number 2, see the patterns of cash inflow. Pay attention to the pattern of cash inflows. Which products are bringing in more cash inflow and which ones are doing the opposite. The pattern is directly related to the commercial activities. Remember, numbers do not generate in vacuum. They are the result of commercial decisions between you and your clients. So use your cash flow statement to compare cash inflow by product types and compare this with your last 3 months and last year at the same time. This will give you so much clarity on how much cash you're generating from your profit operations compared to previous periods. And what did you notice? Is your cash inflow increasing or decreasing? Although a business may have received cash from other sources such as investment from owners, bank loans, and government grants, the main focus here is on cash collection from clients. In this example for Mega Profit Limited, you can see cash received from Mastermind program is way bigger than any other product lines. Now, wouldn't it make sense for this business to concentrate and focus its time, money, and energy on getting new Mastermind clients? Now you can see by analyzing cash flow statement, you can use this information to make smart commercial decisions. Now it's your turn. I want you to pause this video and go ahead and analyze your cash flow statement and see what jumps out of the page for you. Maybe you'll have some light bulb moments and see which products are generating cash inflow for you and which ones needs to go because they're sucking up your time and energy without significant return. Analyzing cash inflow will reveal your top cash generating products, so you have clarity on where you need to focus on. It will also find out your efficiency transform your sales invoice into cash in the bank. You'll also find out your average cash inflow in any given month. You'll also find out customers or customer segments that are most profitable ones, i.e., they pay more for your less time and energy. And you also find out the trend or the pattern. Is it increasing or is it decreasing? Step number 3, see the patterns of cash outflow. Once you have analyzed cash inflow, now this time is to analyze cash outflow. We follow the same process as we did in the last step, now this time for cash outflow. So go ahead and find out and see the pattern of cash outflow for the last 3 months and the last year at the same time. Then we're comparing with like. So compare across 7 categories and see the trend. Are there any cost or expenses that is increasing or decreasing, and why is that? And relate this to commercial decision that took place. Now you'll be thinking, am I getting return on investment on cash spent or not? You see, when you start to analyze cash flow as a resource to generate sales and profit, then you try to justify yourself whether you are getting value for money or not, and this is powerful. In the case of Mega Profit Limited, you can see the business has spent more on Google ads in the previous months and more recently on Facebook ads, and as a result of that, the business has been generating more cash inflow from its operations. Now, wouldn't it make more sense for this business to focus on Facebook ads rather than Google ads? This is the power of analyzing cash flow statement. It gives you clarity. Remember this, without clarity, there's no focus, and without focus, there's the friction in your head, what to do next, becoming financially paralyzed. Step number 4, net cash flow movement. Net cash movement will tell you how much cash is generated from profit. Let's say a business maker sells of $100 in a month, and the cost to make the goods is $60 and expenses is $20. So the profit for the business is $20. From a cash point of view, let's say that out of $100, business was only able to collect $60 and was left to balance of $40 to be collected in the future. And let's say that the business pays $60 cost up front and also had to pay the expenses of $20. Now you see, from a cash collection point of view, $60 collection minus $60 cash outflow for cost minus $20 expense outflow, that leads to negative $20 cash dollars. Now you see, $20 profit is not the same as $20 less in cash, because profit and cash are 2 different things. You can keep your business going by having strong cash flow. You can have strong cash flow by increasing net cash flow movement month by month basis. In the case of Mega Profit Limited, the business has been generating positive net cash movement for the last 3 months on a month by month basis. It's a very healthy business. Now it's your turn. Go back to your cash flow statement and analyze net cash movement for the last 3 months on a month by month basis and ask yourself these 3 questions. If the net cash flow balance is positive or negative, which one is greater? Is it profit or cash flow? And also for the last 3 months on a cumulative balance, which one is greater? Is it the profit or cash flow? If you have been making profits but not reflected in your bank balance, click on the link on the video. I've shared with you proven, tried and tested cash flow improvement strategies that you can use it right now. And step number 5, closing cash balance. Your closing bank balance is your now money. If no one pays you for a few weeks or for a few months for whatever reason, then you want to analyze cash flow so that you can prioritize spend in your business. I always tell my clients, if your cash flow does not cover overhead expenses for the next 3 months, then it's not a healthy cash balance. See the trend of closing bank balance for the last 3 months. Is it increasing or decreasing, or is it volatile? In the case of Mega Profit Limited, the closing bank balance has been consistently increasing for the last few months, and the balance of $30,825 covers overhead expenses of rent, salaries, and office expenses of $4,285, and also tax payments of $2,000. Now it's your turn to see the trend of closing cash balance in your business. Is it increasing or decreasing? Oh, one more thing. Does the cash balance cover the overhead expenses for the next 3 months? There you have it, 5 simple steps to analyze cash flow statement as an entrepreneur so that you can safeguard yourself from potential cash flow collapse and also improve cash flow clarity, control, and confidence, and move your business forward. Step number 1, confirm key balances. Step number 2, see the patterns of cash inflow. Step number 3, see the patterns of cash outflow. Step number 4, net cash flow movement. And step number 5, closing cash balance. If you got value from this video, then like it and share it. Don't forget to subscribe and hit the notification bell so that you do not miss out on future new videos. Your comments are my oxygen, so don't forget to comment below. I respond them all. Now, I would like to turn it over to you. Do you find this video helpful to analyze cash flow and move forward in your business? Let me know by leaving comments below.